If you've been paying attention to the Phoenix real estate market, you might have heard that it's a buyer's market. In fact, for 3 out of the last 4 months, buyers have had the upper hand. So if buyers have more control, why aren't home prices crashing? Let's break it down. The median home price in Phoenix is actually up 4.3% from last year. That might seem confusing, but here's why. Home prices don't react instantly to market shift. It takes time. Selling a home isn't like selling stocks. You can't just hit a button and cash out. A home goes on the market, it might sit for 30 days before getting an offer, then goes through another 30 to 45 days of escrow before the sale is finalized. Even then, we need a few months of data to confirm a trend. So price changes lag behind the market by about 3 to 6 months. This is only the 4th buyer's market in Phoenix in the last 25 years. And if you lived through 2008, you might be worried about a repeat. But historically, home values don't crash during recessions. They usually flatten out or at worst, decline gradually. So could we see home price drops in the coming months? Possibly, but expect more of a slow glide rather than a free fall. Most price ranges are staying steady, growing just 1 to 2% year over year, less than the rate of inflation. But there are exceptions. Condos and townhomes under $400,000 are actually down about 4.2% this month. Home prices between $1 million and $1.5 million are holding strong with a 5.5% increase in value. For buyers, any dip in mortgage rates will have an impact on affordability. So if rates drop, demand could heat up fast. Even though it's a buyer's market, demand isn't the issue. In fact, buyer demand is actually increasing right now. The challenge, there's too many homes for sale. We've seen more new listings this year than in the past 4 years, and the highest number of active listings since 2015. More listings mean more competition, which leads to price reductions, and those are up 58% compared to last year. And sellers aren't pushing prices as aggressively as before, and many are sweetening the deal. Whether that's staging, fresh paint, or new appliances, even after getting an offer, negotiations are a little tougher. Homes under $1 million are selling for about 98.3% of their list price, which is down 98.6% from last year. And homes over $1 million are averaging 95.4% of their list price, meaning bigger price cuts in negotiations. Now there's one bright spot. Mortgage rates have been dipping. After peaking at 7.26% in January, rates are now around 6.78% and could go lower. If they drop below 6.5%, we'll likely see more buyers jump back into the market, which could help sellers out. If you're a buyer, now is a great time to negotiate. If you're a seller, you might need to be more flexible, but don't panic. Prices are not crashing and demand is still strong. Let me know what you think. Are you waiting for prices to drop or are you ready to make a move? Drop a comment below.